What's up, guys? We're doing a breakdown of the E-mini. It's November 11th, 2023. Today was a Fed day. Joel and Powell spoke at 11:30ish PST time, and then the market had a weak breakout after. Yesterday was a broad bull channel. Bears were making money, but it's better for us. It's better for beginners to be buying the dip rather than shorting the pop because we are still bullish from the previous day. We had a gap up and started trading within this channel. You could draw it multiple ways. You could say this is a channel with the gap overshooting, or you could just encase the gap or encase the price and say we were trading in the lower half and we popped up to the upper half, sold off to the lower half, and just grinded higher. Today we had a gap up, and the first bar of the day was a bear bar, so that's already not good for the bull case. You know, after a gap up, we definitely want to see a bear bar, or excuse me, a bull bar for continuation, if you're a bull at least. We did gap up above yesterday's high of the day. That's good. That's good for the bulls. Bears aren't getting continuation. The first bar of the day is a bear bar, but then it's followed by an inside bar, and ultimately we do break out. Bulls have momentum. My mouse just disappeared. So bulls have momentum. Strong breakout, gap up, strong breakout. No continuation though. This was a news bar. Here we get bull flag. We get multiple things are going on here. Hold on. So this was the news bar, and since it closed bullish, this would be a trading range bar, and this could be seen as profit taking. Maybe there are some bears shorting. If they were shorting, what would they short? We look left. So testing the breakdown from about last week we had the breakdown, testing the low of this breakdown. This was the news bar. If traders are waiting, they could short the same level here, but I think that was a little bit more profit taking because it raced up and came down. So I wasn't in this because I thought this was an exhaustion. I actually had a sell order and I had to hit out. So bulls are getting continuation. They get a push up, put 1, 2, 3. They're starting to become parabolic, and this is a nice looking bull bar late in the trend. It is a news day, so I was pretty hesitant getting long here. However, these bull bars are good. This is still a trading range bar, but this is a nice entry bar. Stop here. We have a gap up, bull flag. This bull flag, this is a high one. First pullback, high one. High ones usually get a second pullback because the market moves in two. So now bears get 2 legs. This creates a high 2. That's 2 legs for the bulls, and bulls get long and it goes. I think this was a measured move. So here's the breakout, and they get the morning breakout right here. Let me delete this red line. You guys see the morning breakout? They got 2R here. The dark lines are 2R, and the light green lines are just 50% of the 1 and 2Rs. So you could do that, but it's pretty strong, so maybe we get the whole bar. And now they get 1R of this range, and it comes to the 50% level of this range. So if they get a close above this level, I would look for price to get there. See some selling. Bulls are not buying highs anymore. Okay, this is nice. This is really good for the bears. We have a gap up, first bar being a bear bar, so something's already wrong with the bull case. And these bars are very climactic. They're just bigger than all these bars. Well, not necessarily these bars, I guess, but they are nice looking bars, and they're happening at the end, up at the high of a range. I shouldn't say the end of the trend. This is I think a good candidate for a short because bears get a double top, they get 2 legs, and a lower high, and they break this neckline. So this would be the neckline, and you would have a sell. I had a sell stop order below this bar and got tagged here and held and made money. I was pretty confident this was an exhaustion. I just didn't expect the 2 legs pullback, which I'm trying to be a little bit more patient. So yeah, this is a good neckline to have a stop. You have a stop order placed here. You get tagged and you push down. First PT, if you're short, would be this low because that's the exhaustion would be right here. And then once that happens, we go for 2R of the, or I mean a measured move, not 2R. So after the bears meet their first objective, they're gonna go for here, here, and this lines up with the gap fill. That would be nice for the bears if they can get this. If they close back below yesterday's high of the day, I think that's really bad for bulls. That's gonna look like a failed breakout on the daily or on a different time frame. I think the daily would have a big wick above and then have a body down here. I'm gonna delete that. So bears are selling. They're getting continuation, small bear bars, but they are bear bars. First pull back into the EMA and we sell off, creating a really nice bear flag. If you didn't have this as a breakout, maybe you go for leg 1, leg 2. That's a good candidate. You can go here, or you could do it from the top of the pullback, or you could do it from the EMA. But we have multiple PTs coming up now. I think all these PTs are valid. They're just measured moves, just from different type of. This is a measured move. The green PT is a measured move of the range. The second PT is a measured move of the leg, and both are valid. This is how Brooks likes to. Measured moves are not necessarily like the absolute. All they're designed to do is keep us on the right side of the market. So if you're a beginner, you shouldn't be fading. If you want to get short, you should be waiting for measured moves to be hit, because then you know profit taking will be hit, and then you have a good chance of making at least a scalp. Whereas if you don't wait for measured moves to get hit, like you just short this bar because you're like, oh yeah, I'm shorting. Well, look, the measured move got hit, and then it sold. So measured moves are designed to keep us on the right side of the market and keep us out of trouble. Al Brooks says in the Blue Book, they are not the end all and be all of trading, and there's a lot of emphasis on them because they do tend to work, and I have held for like extended measured moves on good trend days, and they tend to work. But that's because that's what computers see, and computers need a leg. So really quick, the reason leg 1, leg 2s work is because computers can just straight up see it. They can just see like, oh yeah, leg 1 pullback, I'm gonna go for a measured move. It's really easy to measure. However, computers are always doing something different, and they're moving faster than us, so they have the advantage that way. I don't know where I was going with that. I'm trying to say that computers have a stronger edge, so if we just wait for the first move to get put in, we can have a high probable trade, and the measured move will keep us on the right end of that trade instead of trying to. Okay, so buying the dip here would work, but this is like a blind buy. If you bought this high, that's at least you got double bottom, gap up, bull flag, double bottom. You guys see that bull flag? So that was a better trade. This is more of a blind buy. If you bought this, it'd be like, well, the move's not even met yet. They still have the whole leg to do. But now you have at least some reason, like, okay, I'm buying into profit taking. So that's measured moves. I'll be explaining that more in the blue book breakdowns. I've been working on them. The market goes into a consolidation after a big up, big down move. Market goes big up, big down, big confusion because there's sell orders and buy orders, so the market's getting compressed. Not to mention we have FOMC, and the market just tends to go sideways before FOMC. FOMC is happening. That's FOMC right there. It's starting right here. First bar of FOMC. My suggestion is just don't trade FOMC days. I was all like, ooh, FOMC days when I first started trading. And then I learned what FOMC is, what's going on. I learned a bit more market, like what type of trades I like looking for. I mean, this is my bread and butter, this leg 1 or this breakout if I had it in me to take this trade against this candle, but I didn't. So just kind of know where you are in the markets if you're just learning. I'm starting to realize less is more, which I've been trying to take everything under the sun, but if I just focus on a few good plays, I think I'll be more profitable. And that's what I'm trying to get at FOMC. You know, maybe they happen once a month, but if you're going to go for a whiplash, yeah, you could double your account, but you could also blow your account. So it's up to you what type of trader you are. I mean, I say that, and I got long on the breakout because I look for breakouts. So even though I did trade FOMC, it still was in that range of a breakout. Not that sounded confusing. It was still within that like party, or it was still like a breakout trade. I would look for that trade without FOMC is what I'm trying to say. So yeah, so FOMC, market's going up and down. It's moving fast, huge candles. Powell's talking. Not a good time for day traders. I mean, actually, it's a really good time for day traders if you know how to trade FOMC. I've seen some crazy stuff on YouTube about it. So FOMC, market's testing the high. Now we're going to test the low. Here's the FOMC range right now. We have a big up, big down. Market rallies, pulls back, goes up, tests the high, and we sell, giving the market a double top appearance. Now the market has a double bottom and it starts to rally. Double bottom bull flag. See the wedge? I'm gonna delete the red lines and just draw this wedge really quick. And then more red lines. Red just is like really easy for the video to see. I don't use this many red lines when I'm trading. I usually like blue, but I was rewatching the videos and realized blue is like a little too light. So red is just like a good color. I know you guys can see. So here's that bull flag, and it breaks out after the FOMC hobnosh. Nothing's hobnosh. Everything happens for a reason, and this is a double bottom failed breakout. It's important to read that correctly. No continuation after two strong bars. So this could be a 1, 2. Test the apex. Testing the breakout of the triangle. This resistance became support, and the market broke out. Honestly, that is actually how I would frame this. If I was going to frame it, it would be something like that, like a breakout retest. And then we get the breakout of the day, and I had a scalp order set with 20 contracts for a couple points. I scalped out about 3 points because I just knew like we're going to overshoot. I didn't know if we were going to get price acceptance after this move. This first bar of the day honestly just threw me off, as like with this bar of the day and this wick, it just threw me off for getting long, but I did want to catch that breakout. So we are breaking out. Oh, where is the mouse? Here we are. We are breaking out, but it's not that strong, and I think that's because of all the bearishness we had today. It was like the bearishness just in the right places. Like, for instance, what I mean is like first bear bar of the day, first bar of the day is a bear bar. Okay, that's not good. Look at this, triple top failed breakout. Okay, that's not good. You know, it's like it's just in the right places to make the long sketchy. To me, I'm sure there were many limit order longs trading the hell out of that range. This is a limit order market. The market moved up quickly, and then we pulled back into this range. Buy low, sell high. And you can see the buying pressure anyways with the wicks. Lots of wicks. So bulls are buying, but it's just a little too late in the day, and we are pretty late in a bull trend. I think the weekly high, last week's high, is the target because we are only 45 points away intraday. I don't know if we gap up overnight. Maybe we had gap up and close at 45, but I think last week's high is a good target. Or maybe we consolidate and hit it on Friday and fail, or we break out. Regardless of what happens, I just think the market is going to slowly trend towards a magnet on the higher time frame. Well, we're always moving towards a magnet on the higher time frame, so I just think this is the magnet for the upcoming days. Daily time frame. We are right at the EMA, pulling back pretty nicely. We are very close to last week's high, and we saw that on the 5-minute price action. Here we have 3 pushes down, 1, 2, 3, and a pretty big pullback. Yeah, the last days have been all bullish days, but it has been hard to, I think, in my opinion, to be a bull because we're holding against these positions because the pullbacks were deep in these channels. So good on you if you held through that. And it's bullish. This was a really nice buy signal. It just sucks it happened under the EMA. But this close also was above the 50% level, and I remember calling that out in a video, which I thought was pretty important. And now bulls made that, so they're going to go for the next 50% level. And then if bulls need to break this bar and go like that if they want to go higher. Bears need to reject this and give the market a double top appearance. Or the market just gives a double top and a double bottom because the trading range is a double top and a double bottom. That's a bad example, but here we go. Trading range. I'm gonna leave the lines up. Trading range here. And here we go. So double top and double bottom means stay out the market until we have a breakout. And I'm trying to reinforce that because I have been getting ripped up doing that. When we have a double bottom, I'm explaining this on a daily chart. You can apply it to the 5 minute, 2 minute, whatever time frame. When we have a double bottom and a double top, we just wait for breakout. Maybe you wait for confirmation. I'm gonna usually have a order here to get filled and go scalp out some, and we'll see what happens after that. So that's what's going on the daily chart. That's just like a little how to stay out of trouble in the markets, because I think a lot of us, well, I know for myself, I'll speak for myself. I'm making money. I'm just getting shredded in these crazy, like once a week I am getting shredded. And if I can just eliminate that shred, then it's going to be good. So I'm just trying to figure out more ways to stop getting caught up. And I think talking about tight trading ranges is one of them, because I am getting shredded to pieces. Al says things like, if he just didn't do one stupid thing a day, he would make money. Or that was like back when he was trading. I'm sure he doesn't do anything stupid now, but like for a new trader, I think about that too. It's like, if I just didn't do that one stupid thing today, I would have made a lot of money. So I make all my stupid mistakes in tight trading ranges. On the 1 hour time frame, just a zoomed in view of the daily chart really. Here we can see the 3 pushes down. 1, 2. Actually, it looks a little more intricate here. 1, 2, 3. Gap up and a bull channel at lows. So we're trending higher. Bars are getting bigger. Not good late in the trend, but I think the market's racing. The market's always racing to support or resistance. So it's just the trade, the gamble is what is that support and resistance. What is high and what is low per trader is different. I'm going to sign off a couple minutes early, guys. I hope you guys are studying. It's pretty late here, and I've got allergies or something weird again. I get allergies all the time living out here. I almost shot my city, but you guys would figure it out quickly, I think, for those of you in the Discord. Anyways, I've already said too much. Guys, I hope you're doing good. I hope you didn't get shredded out at FOMC. Thank you for commenting. The YouTube channel is growing, which at a really nice pace, so thank you for all the support. Welcome to all the new subscribers. I do price action breakdowns of the E-mini every day. I post them at 3 p.m. Turn on your notifications. Hit the follow button if you learned something. Have a good night, everyone. Bye.